So it's actually one of my favorite openings to a conversation is a client calls in and says, "Hey, I'd love to get a mortgage. I'm retired. I don't have the income to qualify." And usually that call can go one of two ways. One is they're going to go towards, they do have assets, or every so often you do get the client that it's not going to work. They don't have a wealth portfolio. But more often than not, we're referred a client that is on Social Security and maybe a pension. And then because they set up things correctly with their financial planner, they don't have documentable income on their tax return because they're drawing on brokerage accounts that aren't taxed. They haven't even touched their retirement accounts. So it's number one, I like it because now we can be a shining light to figuring out a solution. And number two is a lot of times these asset-based loans or retired clients, it's easy paperwork. It's easier, let's say. So a client calls in, we talk about, again, Social Security, pensions, fixed draws that they already have, annuities. And then I ask the question of, okay, well, do you have a retirement portfolio? So that's 401k, IRAs, those type of product accounts. Yes. Okay. Do you have a round number in those? So they tell me the round number. Okay. Now let's set that aside. Do you have money in brokerage accounts? And what's that round number? Because what I'm doing is I'm trying to figure out, one, how do we get them qualified? And two, what's the easiest way to home plate? Because there are a number of asset-based products available to all lenders. It's just a matter of the lender knows the guidelines well enough to implement them. So believe it or not, Fannie Mae and Freddie Mac have a guideline that you can take. Let's just focus on Freddie Mac first. You can take someone that's 62 or older and take all of their accounts, retirement, cash accounts, brokerage accounts, 100% of the value divided by 240. So 240 months. And that's the income that you get to use. So that in itself, 240 months is a lot to hit, right? So someone has to have quite a bit of money to just qualify based on that. But it helps when they have Social Security and pensions. Fannie Mae is a little more restrictive. They want to do it by the loan term. So if you're getting a 30-year loan, it's 360 months. If you're getting a 15-year loan, it's 180 months. But there's a calculation. So then outside of that, if that doesn't work for the client, there are what's called asset depletion loans. Actually, let's take a step that for a second. That's the other easy way for a regular product is if someone has a retirement account, they can set up a monthly recurring draw because they have access to the money, and they can set it up and we document it at least one time before closing. And that's what we use for our income. It has to be able to continue for 36 months. So the calculation is easy. Whatever the number is in the portfolio of a retirement account divided by 36, that's your max monthly income. So a lot of clients will do that, but you do have to get it set up. You got to make sure your financial advisor's on board. You got to make sure you have the assets to send you the money. So there's a few extra steps, but a lot of clients use that. Then you have the asset-based programs where, remember, Freddie Mac and Fannie Mae want 240 to 360 months. Some will allow for 84 months division, or some will allow for 120 months. So that will give you more income. Those would be portfolio products, meaning that they're not going to get sold on Wall Street. They're going to be portfolioed on our books, so they're investors' books. Then you have Asset Qualifier, which is a cool program, which at simplicity's sake, let's say that you have $1 million you need $1 million for closing. You need a certain percentage documented for closing in addition to it. So you verify $1.5 million on $1 million deal, and that deal qualifies. Now, I took you through the evolution of rates. The first thing I told you, Fannie Mae, Freddie Mac usually have the best rates and products. Then you have the asset depletion programs, which are in the middle. And then you have asset qualifiers are a little behind that. So every step, the rate and pricing gets a little bit higher. So it depends on the client, what they want to go through, what the best product is. And then we take that conversation and figure it out from there.
Got it. Well, That is super helpful because I think that's why clients or potential prospects should deal with a high quality mortgage person rather than just an 800 number or someone who's sitting at your local branch office of your bank, because these are very specialized and very unique, and you need a true professional to do that.